Hello traders, Gary Wagner here, just about 10 o'clock in Honolulu, 3 o'clock in New York on Friday. Happy Aloha Friday, as we say on the islands, 6th day of November 2015, and this is the daily report for gold and silver, our weekend review, and we are ending this week on a tremendous sell-off, pushing gold to 3-month lows, closing off about $17 on the day, 1087. That's just off of the low at 84, the high 1109. Of course, when it broke through 1100, stops were hit, and the majority, if not the entirety of this move, relies itself on dollar strength, and that of course is due to an incredibly strong jobs report that came out this morning. I believe they anticipated roughly 185,000 new jobs, and in fact they saw over 271,000. So really a huge difference, almost 100,000 job difference between the anticipated numbers and the key numbers that came out. The market that we're looking at, in other words, 1087.30, putting it down about $17 on the day, as I said, is mostly due to a strong dollar. Take a look at this dollar right now. Dollar is just a runaway freight train above 99 today. In fact, when we look at the Kitco Gold Index, on this $16 drawdown today, only $2.40 of that is due to selling in the market. $13.70 of our lower $16 pricing today is due directly to a stronger dollar. And you can certainly see that here as this market just flew over what we saw as any kind of potential resistance in the market was, just roughly in this area at about, call it 98.25, and this market just steamrolled ahead of it. The next real level, the only real level above it, is really 100 on the dollar index. So traders, where could we actually see gold prices go from here? Are they destined to go lower? Will we find some support? And that's really what we want to explore on today's report. When we have this kind of a sell-off, we're going to go back, obviously, and look at historical data. However, when we do that, we've got 1080. That was the most recent cluster of lows right in this area. And then the record low since the market actually traded to 1900, the record low has been this low right here, roughly at a 1071. So we're really beginning to run out of data points of our close time period, meaning something within a year or so, but we are right at these bottom numbers here. You have this extreme low below this. Now, for us to actually look at this market to determine where it might go beyond that, should the selling pressure continue, we run out of any kind of real numbers once we breach these lows at 71, because it's the lowest the market has been, as I said, since trading to 1900 moving down. So really, to see anything, we've got to go to pre-rally times prior to the market actually rallying up to 1900. And I put in one fib retracement. It's kind of an interesting point because it's a point in which we saw the market go from 600. It then runs up to about 1250, comes back down to 1,000. So it's these areas that we first started to test 1,000. So on the low side of this is just below or just above 1,000, excuse me, and 1,200. And that gives us this entire range so that if in fact we see this market continue to drift, we have something to kind of give it a benchmark. Now, with that in mind, I'll go ahead and blow this chart back up. And when we do that, these are the following levels that we actually come to. Now realize that this particular set of Fibonacci retracements are drawn from prices that really came in back in 2008, 2009 as the market was running up. It puts a top at about 1231, which matches quite nicely to this particular top here. The bottom that it puts in is around 1040, which is right here. We've got obviously no data points there, but that is why I've actually used it, so we can look at potential price targets. And the one area that we do get, which also corresponds to that 1092 that we had been looking at, is this 75% retracement at 1086, pretty much where the market closed. So we are in an area, and I don't want to sound like the boy that cried wolf. I simply look at areas that make sense to search for significant information that would help us actually identify if a market was about to pivot. Now, that being said, without the market pivoting, obviously the pressure has been and remains under pressure and has been bearish. Also, on each of the reports that we have been doing over these last couple of weeks, even when we're looking for a particular potential pivot point, I have always genuinely coupled that by saying that we have no technical evidence that any pivot's in play. These are simply points that we want to look at for that potential. And traders, we are there again. We're at a point we want to look at. That's a 75% retracement. But again, there is absolutely no technical evidence that we have any kind of bottom in play. This market is sold off fast. It's sold off brutally. But here's the other thing. For us to incorporate any kind of a bullish model, these last rallies, meaning this rally from 1071 up to 1171, has now been all but given back. We're back to flatline pretty much, which really negates any kind of bullish model. And we're obviously, with this kind of a meltdown, in a bearish scenario. How much stronger will the dollar get? Can the precious metals actually find some sort of support in this area? And where is the dollar headed if it goes back to 100 on the dollar index? These are all questions that absolutely need to be answered, and they are the questions we will be exploring all of next week on the Gold Forecast. This has been Gary Wagner, wishing you, as always, good trading. Have a great weekend. We'll talk to you on Monday. Bye-bye.